Hey folks, I have another Google Options update for the 29th week, and it was pretty surprising. I wasn't expecting it to go up so much, but I'm kind of happy that it did. So I will briefly talk about what happened last week, some of my trades I put in on Friday, and what I expect Alphabet stock to do this week. So last week on Monday, which was this red bar over here, if you remember, I sold a string of calls, 102, 104, 106, and I also sold a couple of puts, 87, 91. And on top of those, I also sold some spreads. So you can see my short calls over here, 102, 104, 106. I also had a 112, which would be super unlikely for Alphabet to close above. But the premiums were really good, so I decided to sell one there. And then on the put side, in case the stock goes down, I have to worry about these 91 and 87. So what happened throughout the week? Well, the stock went up and it reached all the way to 108 on Thursday, which surpassed pretty much all of my short calls except for the 112. And then on Friday, which is this blue line here, this green candle, it dropped back down. It started at 103 and I thought, oh, maybe it's going to close, between 102, 104. But the stock finished the day pretty strong. It went up to about 105, which means my 102 and 104 short calls expired in the money. So I was forced, well, I could have closed the positions, but I decided to get the options exercised. So I sold 100 shares for $102 per share, and I sold another 100 shares for $104 per share. So after selling 200 shares, I'm now currently holding 100 shares. So I tweeted out my trades on Friday, and like I mentioned in the tweet, these are all 0 day to expirations. So I basically put these trades in last Friday, and they also expired on that same day. So the first thing I did was sell a short strangle, 104, 109. Let's go to the 15-minute graph and take a look at Alphabet here. We're just looking at Friday now. So right around here, this is where I sold my short strangle. 109 is up here. I did not think the stock would go up that high for the day because the previous day, the highest point was around 108. And even though there was a huge wick up, it came back down. So I did not count that, especially when that was an after hours trading. So because I sold the 109 call and I also sold a 104 put, I was able to make quite a lot of money just on that one trade with 14 quantities at 23 cents each. That's $322. But I did not realize all of this as profit because as you can see here, my next trade, which happened at 10:10, so a few hours into the trading session, I closed my 104 put. I was getting a little nervous and I had to buy back each put for 14 cents. So that was, you can see the price action started to move downwards. And right here, it was at 505. And it pretty much got below this point right here, which was the previous support. And as soon as that happened, and it also fell below the 9, 21, and even the 50 moving average. So that was a sign that the stock was probably going to fall further. And because my short call was so close to that already, it was at 105, which is just $1 above my strike. I decided to get out of my position. So even though I lost 14 cents per contract here, my original trade, I still made 23 cents. So overall, that's still a net profit. And then near the end of the day, half an hour before the market closed, I sold 9 105 call options. And then I closed it just before the market closed. So I sold it to make 12 cents and then I bought it back and spent 7 cents. So that's another small profit there. And the reason I sold the call right around here is because I saw the stock bouncing off of this green EMA. So I thought it probably won't go up too much because even if it gets past the green line, there's still the red line and the blue line, the 50 and the 21 EMA. And at the end of the day, it closed just below 105. So I actually didn't have to buy back my options. I could have let it expire out of the money. But to control for risk, I did close my position for the end of the day. Luckily, it was still a profitable trade. So all of that combined, what does that mean for my options? Well, this is pretty exciting because altogether, I made $660 last week just from the net premiums earned from Google options alone. And that's largely thanks to the higher implied volatility we got last week. However, I am a little sad to get rid of 200 of my shares. Remember, I sold 100 shares at 102 and another 100 shares at 104. The stock did not end over 106, so both of these expired out of the money. But if I take the average price of the 200 shares I did sell, it's 103. So that's why over here I said I sold 200 shares at 103. And because my average cost of those shares were $99, if I sold them at 103 minus 99, that's a $4 profit each. And I sold 200, so that's $800 in capital gains. Now before I had minus $1,600, so I had a capital loss. So I just basically took 800 back from that. So overall, I'm still down $800 in terms of how much realized losses I have, but that is more than made up for from the premiums that I've earned over the last 29 weeks, which is almost $6,900. And the current position I'm in right now is I have 100 shares. My average cost is still 99. Google ended the week at 104.78 last week. So even though I have a realized loss, I have a unrealized gain. So with the stock appreciation and the premiums I've earned from last week, my overall change for week 29 is 2,363, which is a pretty nice boost from last week of 4,200. And this is pretty significant because my goal after the 52 weeks is to earn $10,000, and right now I'm at 65.76. So I'm actually a little bit ahead of my benchmark. And this yellow line here in the graph represents where I need to be in order to finish this challenge successfully, which is to get a 50% ROI. And right now I am just above it, which is really nice. You can see my annualized ROI is sitting at 61% right now. There is still a lot of time left, so I still have to be careful and see what the market is doing over time. But overall, I started with $20,000 and now I'm up 6,500. So that's not a bad return so far. But what about this week? So let's take a look at the one-day chart for Alphabet. Okay, I'm going to get rid of all these lines now because I don't need them, and I'm going to be making new ones. This blue line over here represents the end of this week, which is February the 10th. Right now it's Monday, and there's about a couple hours left of trading in the day. So we still have this upward channel here, which hasn't been broken, and Alphabet has just been climbing over the last couple of weeks. However, we are now extended quite a bit from all the moving averages, especially with this large wick down. It means a lot of selling pressure. So I would expect, if not today on Monday, then on Tuesday or Wednesday, for Alphabet to come back and retest this green line and maybe even the blue line, that the 21 EMA. But that would require it to break out of this green channel that it's been in for the last few weeks. So most likely scenario, it's going to come down like this, touch the bottom, and then probably head back up. And although there's a chance it could break through on the downside, there's no reason for me to think that it's going to break through this channel if it hasn't already, because it's tried to do that before, like over here, over here, over here, here, and here. So there were multiple times where it could have broken through this channel, but it didn't. Now, if it breaks through this time, then I'm going to be bearish, but that would probably be more of a consideration for next week. At the same time, like, where is the highest I think this stock can go to? Well, the next resistance is up here at around 111.6, because you can see the stock tried to go above this back in September of last year. It failed to do so. It got rejected off of that blue line, the 21 EMA. However, because I think the stock is going to go down first before it goes up, it actually reduces the chances of it going up to that level, because the first thing it has to do is get past this 108, which is where it peaked out at last week. So I think around here, around 108 would be a good place to sell a call option, because it is also in the middle of this channel. You can see this dotted diagonal blue line represents the middle of the top and the bottom of the channel. And usually around there, you're going to find resistance or support. For example, over here, you can see the stock came up to the middle line, found resistance, and then dropped back down. Came back up, found resistance, dropped back down to the bottom of the channel. It went through the middle over here, but when it came back up, it found resistance at the middle of this channel again, dropped back down. So if it comes down, let's say it bounces off the bottom of this channel, comes back up, it might find resistance around this line, the middle of the channel again. So I think it's not likely for the stock to go above 108 by the end of this week. Now the put option's a little bit trickier because it's easy to put a line somewhere around here, like $100, because not only is that the bottom of the channel, which it could bounce off of, but it also represents a lot of support over here where the stock tried to go up but couldn't the last couple of weeks, but now it has. However, that is all assuming that the stock stays within this channel. Now, if the stock goes below this, then the next support is actually down here at the top of this bear market channel. So let's take a look at the option chain and see what kind of premiums I can get from Alphabet this week. I will start with the puts as usual. At the 99 strike, you're looking at about 48 cents for the option. So what I might do is sell a 99 put, because if I have to buy the stock at 99, if the option gets exercised, it doesn't really change my average cost. But because last week I sold at an average of 103, it would be a nice buy low, sell high kind of deal. And then I will sell another put at 96. And if that one gets exercised as well, it would bring my average cost down to $98 from the current 99. So I'll try to get 65 cents with this and submit that. Now for my call option, I think I mentioned around 108 because that was the previous high last week. And I don't think it's very likely for the stock to go up that high. If it does, then I'll just profit off of the capital gains. I'll try to get 30 cents for this one.
Order filled.
Okay, so the 108 call just got filled at 30 cents. And I'm just waiting for the 2 puts to get filled as well. I'll drop this down to 63. The stock probably went up in the last couple minutes. That's why the call got filled and the puts are worth less now.
Order filled.
Okay, so those puts got filled as well. And I think that's all I'm going to do for this week. I was thinking about selling some spread, like a put spread down here, or maybe a call spread higher up at 114. But I decided not to because looking at the premiums, I'm not going to be getting too much. And also there's a lot of uncertainty here because like we've bounced off the top of this channel and now we're heading back down. So this is a very precarious moment because I don't know if we're going to go through or if we're going to bounce. Now by next week, we should have a better understanding of what's going on. So the premiums will be a little bit low this week. That's 63 plus 30 minus commission, which will give me about $90 or 120 Canadian. Okay, so this is what I have for this week. 108 short call, and I have a couple of short puts at 99 and 96. So ideally, I would want Alphabet to finish somewhere between 108 and 99. That way, all of my options would expire out of the money. So let's see what happens. Thanks a lot for watching. Good luck with your investments, and I'll talk to you in the next one.